over the past couple of years, fintech has been a growing body, and we've seen because of the spread of connectivity via mobile phones, that has sparked a lot of innovation around the world. One of the most popular ones in the financial inclusion space is mobile money. Mobile money has made it more accessible, that you're able to access financial services at the palm of your hand, and it has made it more affordable for providers to be able to serve people in low-income segments, people who would otherwise not afford the services. It has done so by reducing the unit economics, by displacing traditional and capital-intensive channels for more digital and light channels. And this has resulted in increased financial inclusion across Africa and other parts of the world. Today's session, or rather in the latest wave of fintech, we've seen the embedding of financial services in offerings in a seamless way inside other products and services. But what does this mean? Does it benefit financial inclusion? How is gender inclusive are some of these solutions, and are they sustainable? And where might fintech approaches be most beneficial for the blue economy? So in this particular session, whereas in the first session, we looked at opportunities and challenges more broadly, we'll want to turn around the question and really focus on how does fintech innovation, how does it benefit the blue economy? As per the first session, we wanted to also understand your different, you come from different areas, and we'd like to understand your knowledge of fintech. Some of you may be experts, some of you may be wanting to understand more, and are hence here to understand how the two marry, blue economy and fintech. So there's a second quick poll just to have a pulse on that. Carmen, could you kindly share? Mm-hmm. 2 minutes, please, even less than 2 minutes. And the statement is, which of this best fits you in terms of your current knowledge and awareness of fintech, its opportunities, challenges, players, and issues? Great. This is great. So I'll end the poll now in the interest of time and share the results. So it seems that majority of you have a fairly good understanding of what fintech is, and some of you have some understanding and would like to learn more. So we have a good foundation for this conversation. I'll go ahead and introduce our panelists and commentators. Our key panelist is Maelis Carraro. She's a fintech expert and the managing director of the Catalyst Fund, which has accelerated 61 fintechs in Latin America, Africa, and Asia, all in the last 6 years. One of them is CheaperCash, the 7th unicorn in Africa. Maelis is also a co-founder of Remitmas, which is a savings-focused digital remittance startup, serving Latin Americans immigrants in the US. And that is how starting that sparked her passion in the entrepreneurship and fintech. Then we have Alexis Grosskopf. He's the blue economy expert. Thanks, Alexis. He's the founder and CEO of Ocean Hub, which is an accelerator in the blue economy space. It's focused on supporting Africa's most promising impact for profit startups, with the purpose of preserving and restoring the health of the oceans. Alexis is an environmental engineer and an oceans innovations enthusiast. Then we have Mbale. She's a gender expert. Mbale is an African feminist who has held various research and lecturing positions. She has co-edited two books. One is about challenging patriarchy, the role of patriarchy in the rollback of democracy in East and Horn of Africa. You can actually find it online. And one is a pocket book for building feminist practices. Mbale is currently the deputy director at Digital Frontiers. She's responsible for an online learning program aimed at global network of gender equality champions and change makers. I've actually gone through that program. You should check it out as well. So, Maelis, I guess over to you. And the first question to you is, there has been a surge in funding for fintechs in emerging markets in the past 3 to 5 years. What have been the positive fruits of that? And will this surge likely continue?
Thanks, Shirley. And hi, everyone. It's a pleasure to be here with the vibrant TECA community, and very excited to be here with the rest of the panelists and commentators. I hope this is going to be a fruitful discussion. And of course, as always, feel free to jump in, I think, with your own comments, ideas, feedback as we speak. I don't think this should be a unilateral speech from us, but, very much in the spirit of community, invite everybody to jump in as well. So to answer your question, Shirley, thank you for the easy one to start. Fintech has definitely been the #1 sector, right, receiving VC funding in Africa in particular over the past 5 years, and by far outperformed any of the other sectors. In fact, if you look at data of investment flows, like just in 2021, so last year, Fintech has received 55% of the total VC dollars that went to Africa, which is up from 43% in 2019, 49% in 2020. And the trend is certainly, a positive one. So it's likely that this will continue. And when we look at, for example, the largest we define as mega deals, so over $100 million plus invested in 2021, 9 were in Fintech. And the sectors that I guess are just behind also benefit from embedding financial services and financial products, like e-commerce, for example, is the one right after. And however, that's definitely unevenly distributed. So we have Nigeria continues to be the leading country, followed by South Africa, that is coming right after with roughly 30% of the funding, and then Kenya and Egypt and Ghana are also now leading contenders in terms of VC investments in fintech. This fintech is also, I have to say, the sector that is seeing the most M&A activities, which is very important, like as a prospect for early stage innovators, so relevant for this community when we think about which solutions are going to scale. And I think this has laid a solid foundation for the sector. Yet certainly today there is global market turmoil, like investors are concerned about the immediate effects on all businesses, whether that's fintechs or others. But I think seeing the growth and the strength of this sector, at least in the past few years, and the fact that actually to this month, so April 2022, we are seeing still Africa overall as having raised nearly $3 billion so far, which is a growth of 135% from last year, is an indication that, I think there's good premises and probably likely to see still the surge, as you put it. Now, when we look at what this means for inclusion and for underserved populations, and what are the positive fruits, as you put it, I think those positive fruits to me are multiple. And there is evidence, generally speaking, that there has been benefit for underserved populations. However, we're, I think, a long road from realizing its full potential. And it would be remiss of me to, paint just a positive picture. I think there's still a lot of work to do. But, overall, I'll say a couple of things. Like, the growth of the sector has meant that companies serving underserved populations are seeing success stories. And so there's been more and more startups looking at financial inclusion as a problem and expanding access and usage of financial services. We are also seeing companies testing new innovative business models, so not just pure delivery of financial services, but very much the intersection of fintech and the real economy, so other sectors that already have touch points with customers. And when we have asked, for example, our portfolio companies' customers, so we do research like with the end customers, and recently also in other studies, we are seeing that there is an impact in terms of accessibility of financial services, thanks to technology and digital in usage. So products that are more appropriate, that are better fit, that give a better experience to the end customer. which helps in actually using them. And actually, not just that, but also recently there's been studies showing that there are improvements on financial health measures. So there's this recent, if you all haven't seen it, this recent study by CGAP that has assessed how customers of large-scaled fintechs, including Kaleidofin, Time Bank in South Africa, Grab, and others, are really having changing sort of the lives of their customers. And those research studies have shown that those customers have reported improvements in terms of savings balances, savings have increased, ability to raise emergency funds, ability to manage finances in more sort of holistic ways, like actually planning for rainy days, etc. And that overall their quality of life has improved. And we're seeing similar results again in our portfolio via the studies and research we do with our partner 60 Decibels. So I'm very optimistic actually about the direction that this sector is taking. And yet, of course, there's a long way to go. But what's most exciting is this intersections with other sectors, such as the blue economy. So I'll stop here on this one.
Thanks, Maelis. And I guess the other one goes directly to the Catalyst Fund, which is very in line with what you had began to go into. So the Catalyst Fund backs inclusive fintech. What is the difference between normal fintech, and how do you assure this between inclusive fintech and normal fintech? And how do you
Excellent question. So the term inclusive fintech has actually been a term coined about 6 years ago, like in regular parlance. The main difference is that inclusive fintech's primary objective are to expand the inclusion improve actually inclusion metrics, so reaching underserved population that were formerly excluded from the formal financial system. And that is the primary goal, unlike, say, a regular fintech who may be improving on one of the stacks of the financial service sort of product stack, whether it's at a product level or the user experience level, but there's no direct intention to actually serve a population that otherwise doesn't have the means to access these products. And how do we actually measure that? Like, we ourselves have developed a framework that looks at how are inclusive fintechs actually removing the key barriers to inclusion. Key barriers to inclusion include cost, right? So are the products actually affordable for the end customer? Access, so how are they accessing them? And, you know, as you were saying earlier, the rise in usage and accessibility of mobile phones is certainly improved this. And then also appropriateness, so experience and fit for purpose, right? Are these products actually meeting the customer's needs? Are they designed with those needs in mind, but not only the needs, behaviors also of the end customers that will lead to actually using finance as a means to improve your own financial health outcomes and livelihood overall, and not just as I have a bank account, right? Which is not the same. So this is how we define it, and internally have this AAA framework, accessible, affordable, appropriate, to understand what are the levers that these inclusive fintech business models can push and pull to actually reach those inclusion goals.
Awesome. And in the Catalyst Fund portfolio, you've dealt with different startups, actually 61 in total. So which of these would you think or highlight the potential for being most relevant to the blue economy space?
Great question. I'd love to hear what Alexis has to say later about this. So I've been actually thinking about it quite a bit, because when we think about the blue economy, it's quite broad, it's multifaceted. So what are the solutions that could apply, I think has to be anchored also in the end user. And who's actually participating, which communities in particular are participating in the blue economy. So I've been thinking about a few examples. One company in our portfolio, actually he's here, Serge, the CEO of Abalobi, I think is a fantastic example of this. So it's a marketplace that actually improves small scale fisher folks' livelihoods by removing middlemen and enabling basically direct connection of the small scale fisher folks and restaurants, and now even households, right, Serge? So that those fisher folks can sell directly can actually adopt a better sustainable fishing practices, and that increases also quality of fish, and that fish that taste amazing. Actually, we have been in South Africa, like touring and seeing the operations. Those fisher folks receive therefore better income because you're removing the middlemen for their work. So what this marketplace is doing is also creating a data trail, right, that could be used then, for example, to offer other financial services. And via the digital tools that the fisher folks use, you digitize also the payments transaction, which reduces costs and reduces, of course, reliance on cash and risks of fraud, and makes actually the whole system more sustainable in and of itself, and traceable. So that's an amazing example, and you probably can jump in and tell us way more, but I'll cover a few others. I think another key one related also, for example, to those communities reliant on the blue economy is insurance. When we think about fisher folks, again, there's a dire need for insurance products, whether that's to protect them and their assets, like boats when they're at sea, from disasters, especially storms and other kinds of weather-induced and climate change-induced disasters. We know that will increase. Another tool that I think it can be very helpful is credit, of course. So another company in our portfolio is Aquarech. It's an aquaculture farming company that is similar to maybe a company you all know named eFishery in Indonesia, that provides basically fish feeding products. But in addition to that, uses data from their technology devices inside the ponds to improve the pond performance and the precision of feeding for the fishes. And on the back of that data, offers credit so that those farmers can buy more, fish feeding, and overall improve the operations of their farming, and therefore increase again their income and livelihood. And what we're seeing, for example, with Aquarech, is that the pricing per fish sold, thanks to their technology, has been able to increase almost $1 per fish, which is quite high, and the credit certainly helps in smoothing those incomes month on month. Other example, I think, relate to, for example, blue carbon capture models, and maybe we'll talk more about that later. And also, for example, insurance for, say, ocean waste collectors or waste pickers in exchange for that waste. And we're seeing a lot of similar models, both in urban context, but also I think it applies to the blue economy. So there's very exciting intersections, and I have to say it's very much the beginning of exploring those. So hopefully these conversations will spark a lot more ideas.
Yeah, thanks so much, Maelis. And just to mention, so please join the future expeditions. The next one will have Serge from Serge explaining what they do in Abalobi, as well as other speakers. We will host Aquarech in an upcoming expedition. We will be talking about blue carbon in upcoming expeditions. So we have, it's like Maelis has the full lineup of expeditions we have. I'd like to switch it up to Mbale. Mbale, can you hear us?
Yes, I can. Hello, everybody. I had some glitches in the beginning, but I'm really excited to be part of this platform. And I'm hoping that my expertise can really help us think through how to build gender equitable organizations. And it can also help us think through, there's a business case for building equitable organizations. There are organizations that actually have a culture in which people, they produce more because they want to do the work, and so how I want to contribute to this panel is to just give you some lessons learned from the GEC program. Just briefly to introduce the GEC program. So I am the Deputy Director and the Gender Lead at Digital Frontiers, and the Gender Equality Changemakers program is a new program that started last year in September. And this program really is trying to get organizations to commit to towards integrating policies that are progressive. So policies that think through things like maternity leave, menstrual leave, things that, you know, organizations that also think through just wellness as well, and diversity and inclusion. The learning that takes place in the GEC program is online, and it happens through interactive videos. There's class calls, and really we're targeting different sectors. And so we started off in the financial sector, and yes.
Can I ask you a question, particularly now that you're talking about the different sectors that you've targeted, and you talked about you've targeted the financial sector, just sort of pulling it back to the blue economy. One of the statistics we have is that women make up about 60% of post-harvest activities in the seafood value chain. In many African countries, you find that smoking fish is a key role that women are involved in. We're just wondering now, as we venture into the journey of creating ventures that are more inclusive in the blue economy space, are there particular pitfalls we should look out for in ensuring that they're gender inclusive?
So just a clarifying question. At this is the fisheries industry. So at what level, if we're looking at like an organization, would you find that those 60% of women, where do they sit? I think that's where I'm trying to understand, because essentially an organization that is, so if we're looking at the blue economy, we're not only looking to fill the organizations with women, but we actually want them to lead. Right. So whatever industry they're working in, they also have to take ownership. And I think that's where this platform is so useful, because this is the platform where we can target those 60% of women, so that they can manage their own ventures, they can start their own ventures. They're the ones who have the day-to-day knowledge. A lot of the time, large multinational companies don't invest in them, but they're doing the labor, right? So how do you invest in that 60%? And I think like new ventures that will come from the blue economy, and also fintechs, really need to think through. So how do we best utilize the 60%? The stat exists. However, it's really about ownership, starting ventures, starting businesses. So really, and women's are very different when running a business, and we'll go into what those needs are. But I just think that the difference between a multinational company that has a preset culture, and you have to do organizational work and work on the organizational culture, because it has already existed in the institutional memory of that company. And so we teach about deep structure. So deep structure is the things that are unsaid, the patterns that take place in behavior, the processes that exist in HR, in administration, in leadership. So though you would approach that kind of organization very differently from an organization that is still starting, right, from a venture. So I think it's really useful that we have this expedition now, because in designing the venture, you know, you need to start thinking about diversity at that point. So that's how I can contribute best to the 60%.
Thank you. So just to sort of summarize, or rather capture what you've mentioned, it's about creating solutions that are intentional about giving women agency and empowering them. And then secondly, the solutions should not propagate the idea of deep structure. So social norms that are already existing that push women further into vulnerability. So is this a caution to us as we birth the ventures that are coming out of TECA? Great.
Yes.
Thank you. And to Alexis. So Alexis, being in the blue economy space and particularly the venture acceleration space in the blue economy since 2019, is there a glaring opportunity for leveraging fintech as an enabler for the blue economy?
Yes, thanks, Shelly. Thanks, everyone, for hosting this interesting event and discussion. Yes, I think anything, so a lot of things were already touched upon by Maelis. The concept of, you know, ensuring better equity along the value chain is very important, right? Today, there's obviously too little that goes to the the beginning of the chain, small scale fishermen, for example. And one way to leverage fintech is what exactly obviously Serge and Abadobi are doing, which is cutting out the middlemen and incentivizing better sustainable practices in terms of fishing. So getting better higher value per catch. But actually anything that helps diversify the revenues of people depending on ocean resources. Their core activity will remain blue economy focused. If we take again the small scale fishermen as an example, they will still go out fishing, but if you're managing to diversify the revenue streams, you're increasing resilience and upping livelihood. And there, in the same token, could potentially, you know, and not enforce, but incentivize less strain on ocean resources for one, or fishing closure, for example. So you let the fish stock replenish themselves. So typically you can enable that through fintech. You can give access from your phone or computer to other ways of generating revenues, right? Yes, maximizing your revenue with your activity, but diversifying your revenue streams another way that fintech can support the blue economy. And I'm not sure if Maelis has examples in you know what they've done at Catalyst Fund that perhaps speak to that, to sort of illustrate that. But there's also changing the whole mindset. If you change the mindset from trash to treasure, you know what the guys in the circular economy are trying to do. And by treasure, we see value. By value, I mean, fintech is clearly an enabler of, you know, trying to derive value and enable that circulation of value. So create circularity in that sense, where waste become, or byproducts become inputs, valuable inputs on another side of or another value chain. You can enable perhaps this through fintech, and as it has probably been used in circular economy examples, land-based, you could do this, you know, on the blue economy side of things. It's quite important that we try to think about this, because we're talking about circular economy in a lot of land-based industries, which all more or less have an indirect impact on the ocean, but there are direct ocean impact industries that needs to try and start thinking circularity, and not just, you know, taking out and using only 80% of what we take out, not putting back the 20% or using the 20%. But I have a question for Maelis. I have you talked about, I have two actually. You talked about blue carbon, and you know, would be interested. You talked about, yeah, carbon in general, carbon seeking, and there's a new economy that's being created now where definitely fintech has a role to play, and that's around the blue carbon, in particular for the blue economy. And do we know what role has fintech played in the green space, the green carbon space, and the carbon credit space that could be transferable potentially to the blue carbon? And I have a trickier one, but I don't know, maybe you want a chance to answer this one first before I grill you on another one, Mae.
Yeah, let's take one by one. And I'm glad that Shirley mentioned there's a whole session just on this topic, because, you know, I just want to say up front, like, I'm also learning a lot about this space, and what could be applicable from the green, you know, carbon finance world into the blue carbon finance world. But what I'll say is, So blue carbon, for those maybe that are less familiar, is essentially the carbon stored in coastal and marine ecosystems. And there's a lot of evidence these days that actually the carbon captures and stored in those ecosystems is far greater than what you could actually have on land, which is extremely promising for mitigation of the climate change. But there's also actually adaptation benefits. So this is a solution that touches both, because if you include in those solutions, usually there's coastal protection and food security elements as well for coastal communities. You actually do benefit both adaptation of livelihoods to climate change while also capturing the carbon in the atmosphere. So I think a lot of what we're learning on the green space that could be applicable is, for example, having systems whereby the coastal communities actively responsible for the conservation and preservation of those marine and coastal ecosystems can sell and therefore, right, enact carbon credits for those restoration efforts. And in exchange of that, receive higher income, which improves their livelihood, and aligning incentive between the preservation and of course, the income generation activity that comes from accessing those markets. Now, similarly to what happens in the green world, as you put it, of course, there's definitely sticking points today around the methods for and the complexity of those methods for accrediting projects that actually earn carbon credits. So, and I think that there's definitely really a big willingness in the voluntary carbon markets to improve so that we can reduce the cost and effort and time that it takes to accredit. And this is where fintech can also play a role, right? In terms of leveraging digital tools, leveraging smartphones that are already in the hands of those communities, both for the financial flows to happen in a much more cost-efficient way, and also for the verification aspect. So I think there's that, and in addition, one can think about all the other services that can complement for those carbon capture efforts. So, for example, if the communities need certain tools for the conservation and preservation, you could think of leasing and credit to access those upfront, or pay-as-you-go models so that you don't have to spend, for example, a lot upfront. This happens often in the reforestation setting, for example. But break those payments in meaningful small chunks, which is much more manageable for a low-income person. Insurance obviously can be added for disasters, and those communities are very vulnerable. So I think we're scratching the surface, but it's a super interesting space to look at.
Thanks, very interesting indeed. And I want to just not compliment it, just give a little hindsight perspective to what you just said, where basically carbon sinking and carbon credits that are attached to carbon sinking is a new market. So fintech has a lot to play in helping this particular market to grow in the right direction. It's not about disruption, because you can't disrupt what doesn't exist, right? But there's no systems in place, and it's trying to enable this and make sure it grows in the right direction. So new market, and you touched upon something that's very interesting, I think, is the concept of ecosystem services. Right? Today, a standing forest or a busy fisheries, full of fish, has no value, no economic value today. So your forest is standing, it's actually it's sinking carbon, so reducing climate change, slowing climate change. It's giving us oxygen to breathe that we need, and all living organism, actually, or most living organism need oxygen, not all. And the biodiversity that it houses is also something beneficial to the biosphere in general, but it has no value when it's standing. It starts to have a value when you chop it down and turn it into paper. And that's wrong. That's the fundamentals of this economic system is wrong. There are ecosystem services that should have some type of a price or a cost to them if you disturb or destroy them, ecocides. And perhaps fintech has also a role to play there to put a price or some type of value, cash or kind, into of ecosystem services into the economic system that we operate in. But actually, as a nice transition, I have another question. This one is a little bit harder. Fintech, and especially in Africa, you talked about this earlier, has grown into what my blue economy perspective, not fintech expert, into some kind of a bubble, right? There's funding has funded 1 million solutions to 100,000 problems, right? Million solution to 100,000 problems. So how do we make sure that the efforts that we put into fintech enabling climate resilience and blue economy is not seen as greenwashing or blue washing for that matter? Isn't it like, what's his name again? Bill Gates, just on the name, who was like this individual in just small name. He was this guy when he was just heading Microsoft, and everybody hated him because in terms of business and ethics, he wasn't straight. But then he created Bill and Melinda Gates Foundation, and he cut out polio of the planet, right? So he did something to just kind of buy back a little image for himself. How do we make sure that fintech is not going that way?
That is a very good question. And I think in anything that we do, even actually, fintech for inclusion, you could say, or like any sector, you could have a risk of greenwashing or impact washing at a bigger envelope where your claims for a certain impact, whether that's actually impacting the blue economy or something else, is far greater than the actual result. And I think in our sector, in the impact investing sector, this does happen a bit. But one way to ensure that we stay grounded, I think, is one, always relying on evidence and data. So actually paying attention in building the messages and building stories that really highlight what's actually happening on the ground, not just highlighting the positive, but also talking about, hey, there's still challenges, there's still barriers to overcome, there's still ways to go. And here collectively as a community, what we're doing proactively and knowingly to address those challenges. Like, we're not just sort of starry-eyed about this and the role that fintech can play. We're really intentionally, step by step, like looking at opportunities and doing so basing ourselves on certain principles. Those principles have to be anchored to the benefit in the local communities, lower income, underserved, and of course the oceans in this case, or the planet more broadly. And so how you do that, it's actually measuring. So I think the other piece here is like making sure that we have the right frameworks and the right metrics to look at real change at the end, customer level, at the planet level. So how will we measure if we're being successful? It's important to ask that question now and intentionally like go into these conversations like with those in mind, versus like 3 years from now say, well, I think we had an impact, and here's how maybe retroactively we can actually convincingly say that, because that will avoid, I think, a lot of criticism up front, like, oh, you do just like impact washing, greenwashing. Like, well, maybe, but like we actually are thought through this, and we're intentional about really finding the right evidence and the right data points that point us to whether we've been successful or not.
Good answer. Too tricky question. And I'll ask you a last question, just bounce off your answer, and then because I don't want to take the seat of Shirley, she's moderating this. And there's a point that perhaps Shirley, you can pick up afterwards from Serge. I think it's a very relevant one about ocean equity. Saying this, I forgot. I lost my brainwave. God damn, you just got away. You just got away there. Amazing. Okay, so maybe we can bounce on what Serge put in the chat.
Yeah. In the last session, we actually covered the idea of blue justice as being a kind of framework whereby you assess the needs of the communities where the resources are being extracted and making sure there's equitable share in terms of the benefits. Serge, might you want to provide some experience or pull from your experience on this topic?
All right, thank you, Shirley. This is interesting. This is fun. Thank you for organizing this. Let me give it a go, but I don't want to repeat things that have already been mentioned by Mbale, Maelis, and Alexis. But maybe a few things in kind of my or our experience, having done quite a lot of research with BFA, with 60 Decibel, our own research with various universities. It's quite clear that coastal communities, and I'm going to frame this as small-scale fishers, who are the largest stakeholder in at least the coastal part of the blue economy. Their primary needs are, one, secure tenure. That's the primary need. Two, markets, but not just markets, fair markets. 3, opportunities to rebuild their resource. And just kind of to be maybe a little bit provocative, we often talk about alternative livelihoods, diversification, and of course, those are really important. But within this ocean emergency that we often talk about, the solution is kind of lying in plain sight. And what I mean by that is that fisheries are a regenerative resource, are an potentially extremely resilient resource. We have hundreds of examples around the world where fisheries have been rebuilt very successfully and very quickly if the right framework, the secure tenure, is sticked. So and then of course, small-scale fishers are at the front line of climate change impacts, climate change effects. So that's kind of the frame. And for me, when we think about fintech and fintech within the blue economy, we've got to touch on these touch points. We got to really think about how we as we bring in the inclusive part in fintech, how we embed the fintech within larger programs, larger initiatives, larger solutions, larger innovations that again touch on secure tenure, fair markets, opportunities to rebuild resource, climate change resilience. Otherwise, the chances of unintended consequences are extremely high. We've seen it, left, right, and center. So that would be the one point. And then the other point is something that we're experiencing, in a really hard way, is that only fishers who have access to a reconfigured supply chain and earn a fair price for their catch are able to afford financial services. We often talk about insurance, we talk about even savings products, micro loans, but in our experience, and this is not just in South Africa, only those fishers who've at least got a bit of breathing space because they started earning a fair price for their catch, only then they're able to afford any of these products. And I think that's quite important.
So essentially, Serge, what you're saying is don't put the cart before the horse.
Yeah.
First, as you create solutions, make sure that the solutions empower them and improve their livelihoods so they can be able to harness or rather take advantage of the financial solutions that you may build upon the different solutions. Interesting. Okay. I guess I have a final question to Alexis.
I got my brainwave back for my as well. Should I fire first or you go first?
I could go first and give Maelis a chance to breathe.
Okay.
So are there current barriers holding back blue economy ventures from leveraging fintech? So when we scope the space, we don't see a lot of activity or the margins of blue economy and fintech. Are there any barriers holding that tools from being leveraged?
Maybe 2 top of mind. The first is something that you've probably been facing at Catalyst Fund before and BFA Global around tech savviness or literacy, actually, to start with. And in particular because those coastal communities that are most at the center of the matter here they're more remote. They're not necessarily in the big cities and whatnot. They don't necessarily have access to a lot of data. You can live in a slum, in a township here in South Africa, as we call them, and be under the coverage of 3G, 4G because you're near a larger city. So you're in an underserved community, but you have access potentially to data. And it's not necessarily the case in coastal communities that are more remote more often than not. That's one thing. So literacy and access, even infrastructure, sometimes can be a problem. Of data is one thing, but also access to broader markets. I mean, technology helps you scale your activity, right? If there is only one road and it's a dirt road that leads to wherever your fishing grounds are, it's good that you get a technology that allows you to sail from Lamu to Mombasa, but if there's no road going from Lamu to Mombasa, you're screwed, right? Excuse the French. But so infrastructure is also a problem, but not only in terms of data. Another thing is on the other side of the marketplace, actually the the source of your goods that you're selling and transforming and selling, adding value, the ocean. We know so little about the ocean. It's insane. It's crazy. So how can you scale something that you just know half of, the thing about? And in another way, how do we make sure that if we do scale, we're doing this with the right impact? You can have it at heart, but is it happening really? Because we know, again, excuse the French, I'm French, we know fuck all about what's happening there, away from the heart, away from the eye, away from the heart. It's very difficult to understand and to seize the impact that we're having. So scaling something with, just knowing half of the impact that we're having is also perhaps a little setback in developing technology of any sort, and fintech being one of them, in scaling the coastal and enabling, empowering the coastal communities. If that answers your question, I have one for Maelis. It's an easy one actually, because she was talking about the fact that we need to make sure, if fintech's not to be something that does greenwashing or blue washing, we need to make sure that we embed into the lessons learned from previous, obviously, fintech experience in the impact space, which does mean potentially that there's a massive opportunity in the fintech space for blue economy, because we've learned a lot now. So we de-risked the introduction of fintech into the blue economy and the blue impact space, right? Which is grandiose, right? It's very exciting. We'll have less trial and error, or as many trial but less error potentially, which is very exciting, right? So if that is the case, would you recommend, Maelis, that we rather focus on trying to transfer not just the lessons learned, but the technology in the sense that how they were used in terms of fintech in the green economy to a blue economy? Is that the priority that we should be given instead of starting from scratch?
Mm-hmm. Yeah, that's a very good question. I was like, well, maybe I dodged a bullet, but actually not. No, I'm kidding. It's a very important question, because you're right. We don't want to, as you said, we have the opportunity here to de-risk a path to impact and effectively use fintech solutions in the blue economy. There's a lot that has been learned. My take would be that there's a lot of lessons from the green, you call the green fintech world that can be applied, and also from building inclusive fintech products for underserved, more vulnerable communities that can be applied. I don't think necessarily that there's an order, like one before the other, in particular because the green fintech world is typically, and again, I'm generalizing here for the audience, but been applied more to mitigation and carbon sequestration efforts versus in inclusive fintech world writ large that has taken a livelihood-centric approach to serving individuals and community needs that can have much more of an application in the adaptation and resilience building realm of what we need in the blue economy. So I don't think it's either or one first and then the other, but rather like actually taking them both, because there's different purposes and both are critical. And in any event, we have also to take into account for idiosyncrasies in the blue economy, like a small scale fisher folk. Yes, it may be similar. And again, I'm saying to a smallholder farmer in the land space, but there's also things that are very specific to that small scale fishers that are not applicable to the farmer. And those have to still be taken into account when we design solutions that have that user centricity at heart. So we're not starting from scratch. We can take it from both. There's mitigation and adaptation lenses here that are useful, and to look at them actually in tandem, but also taking account for idiosyncrasies in the blue economy, I think is important. So not just do copycatting of other stuff.
Thanks, Maelis. And Alexis, based on what you just told us about the barriers for leveraging fintech in the blue economy, actually, Ibrahim has a question in the chat. Ibrahim is from Twiva, an influencer-powered social commerce platform. And his question is, does social media hold value in the whole agenda of incentivizing communities focused on the blue economy, knowing what you know?
It's a good question. I think for indirect impact, 100%. Direct impact, perhaps a long shot, but always worth trying. I don't know how, what's the reach of Facebook and Instagram into the coastal community, along coastal communities in Africa. first, there might be some, so definitely worth the try. Second, if you reach, I mean, their primary source of information is conversation, right? Not necessarily on the phone, but in-person conversation. So the more people know, through your influencing channels, the higher the likelihood that they'll come across someone that will convey the idea that you were pushing onto your social media channels to them, into the coastal communities. So whether they'll trust that person or not, I don't know. Trust is a big issue in coastal communities, in communities generally speaking. But policies and people are drivers of change, right? They influence change. They affect change. If you and I decide to stop single-use plastic, or if the government bans single-use plastic, it forces the businesses to think, and business can be a coastal community, a cooperative, a group, to think, okay, how are we going to remove single-use plastic off our shelves? At the end of the day, it doesn't provide them with a solution, right? They are influencing change, but not affecting the change. And so I would tend to think that the more people are influenced and the information disseminated across the populations, the more drive there is for change. So please don't hold back. Go wild on trying to get people to become more green and blue. I think it's definitely a good point. How much or how long after will that have an effect on coastal communities? I can't tell you, but there's no harm in doing good.
Thank you all so much. I hope the conversations you had were engaging. I'll invite David Porteous, who's also a team member of TECA, to sort of summarize what we've seen coming out from the different groups, and then invite you to a poll. David?
Great, thanks, Shirley. And let me thank also all the panelists we've had today. Maelis, Alexis, and Mbale, thank you for adding the perspectives that you brought, which have really helped, I think, create context on the second expedition as TECA sets out on its way. And as Shirley, you said earlier, the purpose of these expeditions really is twofold. The one is building community around the topic. So we hope the small group conversations helped do that. And your output is recorded in forms that the TECA team can process and take into account. So thank you for that. The second reason, though, is building this atlas of opportunity, which can help to point founders in the right direction as they start in the TECA process. So I think today we've heard a whole lot of things, and I'm just going to briefly summarize them and lead up to where we want to end, which is asking you to rank them. And maybe, Carmen, we can even put up the poll as I'm speaking through what we've heard in the session today, and maybe there will be a chance for panelists to comment. So what you see in the poll there is a list of 7 different things that we heard coming out in today's session. And the poll asks you to think about ranking them in terms of their relevance. So these are things fintech brings to the blue economy. I think the one thing we've heard strongly today is that we don't start from scratch here. We have 2 starting points which help us. The one is fintech has been going for quite a while, 15, 20 years. We heard from Maelis, it's the most active sector of venture investment. So there are lots of lessons, lots of approaches that have been developed that we can think about applying. The second we heard from, among others, Alexis today, is that the green economy has been active for a while, much more so than the blue economy. I've heard someone say the blue economy is 15 years behind where the green economy development and thinking has been. And so we have the opportunity in TECA to bring those 2 things together and seek to accelerate the opportunities in the blue economy. And we do that against the background of what Serge described, this ocean emergency, the fact that people like small-scale fishers are on the front lines of the climate problems, and not just the climate problems, the over-exploitation of fishing resources, all sorts of other problems that make this a complex thing to resolve. So we heard about the problems, but also opportunities. And the one that sticks with me, surely, is the reference to the blue economy being ultimately the most regenerative. Those fishing stocks do regenerate, as Serge pointed out. As Maelis told us, blue carbon in seaside ocean communities is perhaps the biggest source of stored carbon that exists today. And so the opportunities that we've listed there that were referred to by the different panelists and commentators at different times are about bringing out the things that fintech does well. So we know that fintech embeds, and particularly what it embeds is two things: micropayment approaches, and because they're micro, that's what makes them potentially inclusive. And of course, payment is the basis of any business model. Without that, you don't have a business model if you can't collect payment. So micropayment approaches, and you can see those coming out in PayGo as one particular applied example. The second thing that we know that fintech does well is to collect and use data, often connected to the payments, but often beyond the payments from other alternative data sources as well. And in the fintech arena, we've seen a lot of models simply to collect better data. I know that David Delso is on here, and he started a fintech company whose model was really just to collect data about small shopkeepers in order to sell that information. That's a business model as well. But we heard Maelis talk about how with that better data, fintech does enable credit potentially to be provided, insurance to be provided, and you see that on this list of opportunities here. We heard the caution from Serge, though, that while you can provide these added financial services, if people can't afford them, that's simply putting them into debt traps or over-provision traps that don't actually help them. And so we want to think about how fintech might help diversify income streams as well. That's the reason why you see the gig platform mentioned at the bottom there. It might be necessary for people who are small-scale fishers to find other ways to generate income in future. And then we heard a lot about marketplaces, the way fintech practice has helped to create marketplaces. Alexis told us about Blue Carbon as an example, and some of you would have seen Stripe, a leading fintech company, has in fact been pioneering the Frontier Fund, which will be pre-buying carbon credits, not just blue carbon, green carbon as well, but it's a major initiative to kind of democratize the ability to buy those carbon credits. And then just finally, as you're thinking about the poll and the results are coming in, and we're going to end it in just a minute, one of perhaps the biggest lessons I heard today about embedding fintech approaches actually is about embedding the ways that fintech has had to think about de-risking the potential negative impacts. We've heard that come up. Maelis was frank about that. Fintech has not always had positive impacts, and to be intentional about positive impacts and inclusive fintech takes work. It takes intentionality upfront with principles, as she talked about, with measurements over time, all those sorts of things as well. And I heard today the encouragement from Alexis that if we're to avoid blue washing, that's the equivalent of greenwashing, which has gone on in the green space here in the context of TECA, we need to be really intentional about that. But surely I think the combination of these opportunities we've heard, all of which we'll be building on to explore further in expeditions to come, and we hope founders will pick them up. I think they make the point that there's an opportunity here. As these points, fintech and lessons from the green economy come together into the blue economy, there's enormous potential to scale. And that's why our hope is that TECA Ventures will in time be part of that scaling.